In this video, I'm going to be breaking down the 3 things that I believe every strategy should have when you're breaking down the chart. Now, these 3 things are essential to price action, the bare bones behind the market, and I believe literally every strategy should include these to increase your win rate, to have that right RR to win rate ratio. And this is just something that I've seen personally over the time as someone who's 500k funded, and I've had multiple payouts, as you can see. Now, as you know, we get straight into the video to break down and give value. So let's do that now. So number 1 is your top-down analysis. This means that your higher time frame sets the direction and shows the overall trend. It's like zooming out. It shows you the overall picture. And then when you zoom in to the lower time frames, you get to see the breakdown and the more intricate details of price. Now, these two go hand in hand, and that's why you need to look at both of these, so the higher time frame then the lower time frame, so you can understand really what's going on and paint a better picture in your head. So we're going back to school for this, right? This is an example right here. As you can see, this is the 4-hour time frame and this is the 1-hour time frame. Now, a 4-hour time frame, it looks at one candle, right? But the 1-hour time frame means it's 4 candles makes up for the 4-hour, because 1 hour, 1 hour, 1 hour, 1 hour equals 4 hour, right? Now, as you can see, this 4-hour candle is a bearish 4-hour candle and it made a top wick. So what it could have happened is the candle opened, there was a bullish 1 hour, small bullish, then bearish, bearish, and then a small bullish down here to make this bottom wick for this candle. Now, when you understand how this goes into that, then you can understand price better. So if there's a big bearish candle here, and then you can see price sort of, say this was moving around, say it had a bit of a wick and it was moving around, you'd be able to tell based on the 4-hour, maybe the last 2 4 hours, what the overall trend is still set. So you would know on the 1 hour, say if the last 2 4 hours were bearish, really strong bearish, and they're closing below like strong zones, then you know that on the 1 hour, even though it might have a small bullish candle, we're still going to be looking for sells because we want to go with the overall direction. Now, that is something that is very, very important in your trading because it allows you to understand the market more. You want to trade with the clearest picture possible. If too many things are contradicting each other, for example, if the 1 hour is contradiction with the 4-hour and the 4 hours contradicting the daily, then the day itself might just not be a good day to trade, because you might not be able to get the higher probable setups, especially if you're trying to go with the trend and with the picture. If you're a counter trend trader, you even still need the higher time frames to paint a picture so you could see if it's overextended or not and things like that, right? So very important, top-down analysis. What's the second one that we need to know? So the second one you need to know is market structure. That is another bare bones of the market. A candle on a higher time frame will mean structure on the lower time frame. For example, if you've got a 1-hour candle, a bearish candle, on the 5-minute it might look like this, because you've got to look swing low, swing high, swing low, swing high. That's lower than the previous high. That means we're losing the momentum of the buyers and we're coming down for the sellers. And this picture is great because this, if you see on the higher time frame is being bearish and you can see there's the range for it to go, then on the lower time frame you can see this bearish structure forming, then you can just hop on the trend and take a sell. Same with the buys, you know, up here you got a bullish structure, you got low, high, lower high, higher high, lower high, high high, right? So you can see that price and the buyers are slowly winning. Now, if you see a structure forming like this and the higher time frame shows you the overall direction that we're going to be bullish, then you can take a buy at any of these pullbacks, or you can even you could win if you take it on these highs. You just aim for like a less risk reward, like a 1-to-1 or something. Now, this one is a consolidation. Now, consolidation is what gets most people because you can get caught in any fake out right here. This is where I tend not to trade. I tend to just wait to let price do its thing. Some people are consolidation traders and they catch the bounces between these once they identify that it is a consolidation. So those are the 3 things. The ways the market moves, it goes up, it goes down, and it consolidates. You just need to understand that. It sounds simple, but on the chart, it is a bit different, and you need to just understand how they feed into each other, the lower time frames, higher time frames. So that is something that your strategy also needs to do. And now we've had top-down analysis, market structure. what's the third and final thing that I believe every strategy should have? Now, the third and final thing I believe every strategy should have is liquidity. Now, liquidity is how the market moves. The way I think of it and the way I teach it is that liquidity is essentially fuel. You know how like a Formula 1 car, it can go around the race, but it's going to run out of fuel, right? So it needs to pick up fuel and go to the pit stop. Now, the pit stop in the market is where liquidity is, where structure points are, where stops are, an area that a lot of orders are, right? Because that is an area that allows big orders to be placed with less slippage and stuff. So that's why orders are placed there, and that's why the market tends to do a pit stop there. So for example, we're in a bullish trend right now, right? As you can see. Now, we pull back sometimes, and yes, we might break this low, but that's because we're grabbing liquidity and taking out this point and this point, because that's where a lot of liquidity is, to still come up. So a lot of people would have hopped on sells here, but we've taken liquidity here, and some of the people that trade and have liquidity in the strategy as well would be able to catch the move here, coming back into the trend, and caught this big move from here to here. Okay, now that is liquidity. Liquidity is essentially fuel of the market. So when you have highs, major highs and lows, liquidity is sitting on there. When you have equal highs and equal lows, so you've got say two, like a double bottom and a double top, that is where liquidity is sitting as well. Liquidity is very important. So when you go on your chart, make sure you mark out liquidity, where liquidity is resting, the main areas. Don't need to do every single tiny liquidity area. Just mark out maybe on the higher time frame where liquidity is sitting. Because when liquidity takes those out, if you've still got a bigger picture that you're going bullish, then likelihood is that you're going to take out the liquidity to remain bullish, and you can catch a big risk to reward trade in those areas. That is what some of my trades where I can catch big moves, lots of profit, past phases are usually ones that are to do with liquidity as well. But remember, it's not just liquidity. You have to use the other two things that I said. That's why I made this video. The three things that I believe that you should have in your strategy. Any strategy, regardless of if you do ICT concepts, you have your own strategy, you do this, SMC, or whatever, you should be paying attention to these three things, because they are literally the backbone, the skeleton of price action, the market, the fundamentals, the physics of the market, I guess you can say. So I hope you guys enjoyed this informative video. If you did, drop a like, subscribe. I've got a free Discord in the description, or you can learn my strategy as well, which is going to be down there as well. But yeah, man, I hope you guys enjoyed this video, and I'll see you guys in the next one. Peace.